People think I got rich because I was smarter than everyone else. They're wrong. Being smart is cheap. The world is full of intelligent people who never learn how to behave. What made me wealthy was something far less glamorous. I learned to wait. I learned to do nothing when nothing needed to be done. I learned that impatience is the great killer of fortune. Most investors can't sit quietly with their own thoughts, let alone their own money. They want action. They want excitement. They treat the market like a casino and then wonder why they walk out broke. They believe doing more will make them more. In reality, every foolish move comes from the inability to sit still. I've watched people jump into stocks because someone else got rich. I've watched them panic when prices fell for a few months. I've watched them chase trends like emotional children and call it investing. They think they're losing to the market, but the truth is they're losing to their own stupidity. Their problem isn't knowledge. Their problem is behavior. The real edge in investing doesn't come from being fast. It comes from being rational. You don't need to be brilliant. You just need to avoid being an idiot. Do that consistently, and compounding will take care of everything else. But here's the painful part. Avoiding stupidity requires patience, and patience feels like doing nothing. People hate doing nothing. What most investors never understand is this: opportunities worth acting on are rare. Most things you see are not worth touching. If you force action, you force mistakes. My strategy has always been simple. I wait until something is so obvious that it would be difficult to screw it up. Then I buy it, and I hold it, not for weeks, not for months, but for years and decades. Compounding doesn't reward the busy, it rewards the patient. You want to know why slow and steady wins? Because the fast and emotional eventually destroy themselves. They buy high, sell low, panic early, celebrate early, and repeat the cycle until their money ends up in the pockets of someone calmer, someone more rational, someone like me. I never cared about looking active. I cared about being correct. I never cared about chasing quick money. I cared about letting time do the heavy lifting. You don't need a long list of great investments to get rich. You only need a few held long enough to matter. Slow and steady isn't a motivational slogan. It's a survival strategy. The impatient pay for the wealth of the patient. That has been true for centuries, and it will remain true long after I'm gone. I didn't beat the market with brilliance. I beat it by ignoring the noise, playing the long game, and refusing to be hasty. You can't do that if you're trying to get rich fast. You get rich slowly. That's the only way anyone actually keeps what they earn. People talk about finding opportunities in the market as if the goal is to chase as many as possible. They hunt stocks like they're collecting stickers. They think success is about times doing more. Asterisk. But here's the truth. Most people will never accept. Wealth comes from asterisk, asterisk, ignoring almost everything. Asterisk, asterisk. I've made most of my money by waiting, not by acting, not by predicting, not by gambling on every shiny idea that came my way. The world throws thousands of opportunities at you. 99% of them are garbage, and the remaining 1% won't matter unless you have the discipline to avoid the rest. People hate this idea. They think it's boring. They think if you're not constantly searching, you're falling behind. Listen carefully. Asterisk, asterisk, busy people rarely grow rich. Asterisk, asterisk. They're too distracted to notice the obvious. They try to be everywhere, so they never win anywhere. The market pays the patient because very few people are willing to be patient. Rare behavior works because it's rare. The more investors chase, the more I wait. The more they panic, the calmer I become. The market hands its money to the person who does nothing until something clearly worth doing arrives. Here's the problem. Your brain is wired against this. It hates inactivity. It craves stories, predictions, action. When someone tells you, do nothing, your brain screams, that can't be right. Yet that's the strategy that works. Most decisions I've made in my life were decisions asterisk, asterisk, not to act. Asterisk, asterisk, I avoided stupidity far more often than I pursued brilliance. You don't need to choose between thousands of stocks. You need to learn when something is so good that times not owning it would be stupid. Asterisk, good investing is recognizing a fat pitch, an opportunity so obvious you don't need to think twice. You shouldn't swing often, you should swing rarely, but powerfully. The reason people chase the wrong opportunities is simple: envy and impatience. They see someone else make money and they feel left out. They want a shortcut. They want excitement. They want to feel like they're doing something. But investing is not about feeling clever. It's about avoiding mistakes, holding on, and letting compounding become your partner. If you're trying to be fast, you'll end up being foolish. If you're trying to constantly act, you'll eventually act stupidly. If you're trying to catch every opportunity, you'll grab most of the bad ones. The winner is not the investor who works the hardest, but the one who resists the hardest. Want to know why I ignored most opportunities? Because almost all of them were designed to steal time, attention, and money from impatient people. The market sets traps for the greedy and rewards the ones who know when to sit down and shut up. I became wealthy by understanding something that sounds ridiculous to most people. In investing, asterisk, asterisk, the less you do, the more you keep. Asterisk, asterisk, the fewer mistakes you make, the richer you get. And you avoid mistakes by ignoring nearly everything that crosses your path, waiting for the rare moment when doing something makes sense. If you can't ignore 99% of opportunities, then you will never fully benefit from the 1% that could change your life. People always ask me, what's the secret to finding great businesses? They want formulas, complicated screens, hidden tricks. They want something mystical so they can feel like experts. But investing isn't magic. It's mostly eliminating stupidity. You don't need a genius strategy to win. You just need to stop doing dumb things and choose a few good ideas you truly understand. Most investors never take the time to understand anything. They buy stocks the way children choose candy, whatever looks exciting. They ask, what will make money now? That's the wrong question. The right question is, what business will still be valuable 10 years from now? If you can't answer that, you're not investing. You're gambling. The world is full of companies that look profitable today but will disappear tomorrow. Chasing them might make you look active, but activity is not intelligence. I look for businesses that would survive even if I went into a coma and woke up a decade later. If I need constant updates to feel safe, it's a bad investment. A great business doesn't need your attention. It quietly earns money while you do nothing. You don't get rich by predicting markets. You get rich by owning wonderful businesses and letting time do the work. People think investing is about spotting winners. It's really about avoiding losers. A great business has honest management, durable, competitive advantages, and the ability to grow without needing genius leadership every year. If the business only works when everything goes perfectly, it's not a great business. It's a fragile one. Here's what most people never learn. When you find something truly great, your job isn't to trade it. Your job is to asterisk, asterisk, sit on it and let compounding multiply your patience. Asterisk, asterisk, one good decision, held for a very long time, can do more for you than a lifetime of clever ideas. You don't need dozens of winners. You need one or two that keep growing without your help. The tragedy is that most investors get bored long before compounding rewards them. They sell too early, lose patience, and chase the next shiny promise. They break the very engine that would have made them rich. Compounding is powerful, but it only works when you refuse to interrupt it. A great business gives you freedom from stress, freedom from guessing, freedom from endlessly reacting to the news. It allows you to make money without constantly trying to be smart. The real secret is this: asterisk, asterisk, let great businesses be great and get out of their way. Asterisk, asterisk. People believe the stock market is risky. They think risk is volatility, the ups and downs of price. That idea has destroyed more fortunes than recessions ever have. Volatility isn't risk. Price movement isn't risk. Real risk is not knowing what you're doing. The market isn't dangerous. Ignorance is. When you buy something you don't understand, you're already in trouble. When your decision depends on the opinions of others, you're already lost. When you invest only because someone else made money, you're already behind. A person who can't think for themselves has no business putting a single dollar into the market. If you don't know what you own, you won't have the courage to hold it when the world panics. People run from stocks at the first sign of trouble because they never truly believed in them. They mistake confidence for courage and speculation for conviction. They buy based on excitement, then sell based on fear. They call it strategy, but it's just emotional chaos. They buy a business without studying it, then panic when the market reminds them they had no idea what they bought. I never cared about short-term price drops. If I bought a great company and its stock fell, I didn't see a loss. I saw a discount. I didn't need the market to reassure me because the business itself reassured me. Once you understand the business, the price merely tells you when to buy more, not when to run away. If you want to reduce risk, stop trying to predict the future and focus on things you can actually know. You can understand the business. You can evaluate its durability. You can judge its management, its economics, its competitive advantage. You can avoid paying foolish prices. That's real risk control. All the rest is noise. But here's the catch. Doing this requires effort, patience, and the willingness to look stupid when you refuse to play the short-term game. It requires the discipline to hold when the crowd screams, the humility to admit you don't know enough, and the willingness to learn instead of gamble. People hate that. They'd rather pretend to be smart than take the time to actually become rational. I've watched countless investors destroy themselves by trying to be clever. They want complicated strategies because simple behavior feels too ordinary. They believe risk is something they can outthink, rather than something they must outweight. The truth is extremely boring. The safest investment is the one you understand and are willing to hold through madness. Real risk isn't the market going down. Real risk is you losing your mind when it does. Most people think success comes from saying yes to the right opportunities. They're only half right. In reality, success depends far more on how many bad opportunities you can say no to. Most of the money I've made didn't come from brilliant choices. It came from avoiding stupid ones. I wasn't looking for more things to do. I was looking for more things to ignore. The world will tempt you endlessly. It will hand you investments that look exciting, trends that look unstoppable, and predictions that sound intelligent. If you take the bait every time, you're not an investor, you're prey. My greatest skill was not picking winners. My greatest skill was refusing losers. You can survive bad luck, but you can't survive bad judgment. People like to believe they're rational, but put money in front of them and they become emotional animals. They want involvement. They feel they must act. They're terrified of missing out, even when they don't understand what they're chasing. I learned early that human beings are wired to make stupid decisions. So I trained myself to be suspicious of anything that looked too attractive, too quick, or too popular. You don't need to participate in everything. In fact, you shouldn't. Every yes steals time, attention, and capital from a better opportunity that will come later. A good investor has a strong filter and a stronger spine. You must be able to reject opportunities even when everyone else is making money from them. Most fortunes disappear because their owners couldn't say no to greed, trends, or ego. The best deals I ever made were the ones I didn't touch. The obvious frauds, the complicated schemes, the fast-talking sellers, the overhyped industries, avoiding all of that protected me more than any perfect investment ever could. People want to chase every chance at profit, but chasing everything means committing to nothing. And when you commit to nothing, compounding can't work for you. Saying no doesn't feel good. It doesn't make you look clever. It doesn't give you stories to brag about, but it gives you something far better: freedom. You're free to wait for the rare moment when something is obvious, durable, and truly worth owning. You're free from impulse, panic, and envy. You're free from the chaos that destroys most investors. The richest rewards come to those who resist the temptation to act. If you want a peaceful portfolio and a wealthy life, learn to reject most of what comes your way. The world will constantly test your patience and tempt your foolishness. Your job is simple: say no until saying yes is undeniable. If you want to understand why most people never become rich, don't study inflation, taxes, or recessions. Study envy. That one emotion has destroyed more wealth than any economic disaster ever could. People don't go broke because they're stupid. They go broke because someone else made money faster, and they couldn't stand it. Envy makes intelligent people behave irrationally. They stop thinking about what's good for them and start chasing whatever someone else has. They don't ask, "Is this a good decision for me?" They ask, "Why am I not getting what they're getting?" Instead of following logic, they follow comparison. And comparison is a parasite. It eats judgment first, then wealth. I've seen investors abandon excellent strategies that were working simply because someone else appeared to be making more money. They chased trends they didn't understand. They mimicked trades without studying them. They risked capital because they couldn't tolerate watching someone else succeed while they stayed patient. They weren't competing against the market. They were competing against their own insecurity. Here's a truth you won't hear from most people. You don't need the highest returns to become rich. You just need a return that's good enough and the discipline to stick with it. But people hate good enough. They want bragging rights. They want to feel superior. They want to look smarter than the next person. They would rather risk everything than let someone else have a better year. Envy doesn't just destroy portfolios. It destroys perspectives. It makes people forget their goals, abandon their disciplines, and stop thinking independently. The moment you measure yourself against someone else, you're no longer investing. You're competing in a game with no finish line. And games with no finish line never reward the players, they exhaust them. I became wealthy because I ignored the race entirely. I didn't care about being faster. I cared about being durable. I didn't need the highest returns. I needed returns that would compound safely for decades. If you can learn to be satisfied with progress instead of performance comparisons, you'll succeed beyond the reach of those who chase attention, excitement, and envy. The envious investor eventually destroys himself. The rational investor eventually owns everything he needs, including peace of mind. People love to talk about buying stocks. They rarely talk about holding them. Everyone is eager to start, but very few have the discipline to stay. Buying is exciting. Holding is boring. And that is exactly why holding is profitable. Wealth is not created when you buy. It is created while you wait. Most investors sell too early for one simple reason. They don't understand what they own. If you don't truly understand a business, you will panic at the first sign of trouble. You will check the price every hour. You will interpret normal fluctuations as disasters. You will search for someone to confirm your fear. Then you'll sell not because you're wrong, but because you don't know if you're right. When you buy something great, your job is not to outsmart traders, time the market, or predict news. Your job is to sit still. People think sitting still is easy. It isn't. It's excruciating for the undisciplined. The market will tempt you. It will offer small profits, scary declines, and constant distractions. If you cannot ignore those distractions, compounding cannot work its magic. I've seen investors brag about small gains and lose decades of fortune they could have built by simply holding. They snatch pennies in front of the steamroller of compounding. They want quick satisfaction more than long-term transformation. They ruin a lifetime opportunity because they crave momentary comfort. I held investments through recessions, panics, crashes, interest rate disasters, scandals, and mass hysteria. Not because I enjoyed misery, but because the underlying business remained excellent. Prices changed. Stupidity in the market came and went. The business, however, continued its march toward higher earnings. Why would I abandon something that was working just because the crowd temporarily lost its mind? You don't get rich from reacting to short-term noise. You get rich from staying loyal to long-term truth. Selling a great business because the stock fluctuated is like divorcing a loyal spouse because you heard a rumor. If the fundamentals are intact, why leave? Most people don't have the patience to let time reward them. They don't want forever. They want now. Wealth cannot exist in the world of now. If I had sold every time the world looked uncertain, I would have died as an unknown lawyer with a modest savings account. Instead, I became a partner in one of the most successful investment stories in history because I learned something most people never will. The ability to hold is rarer than the ability to buy. You don't need to trade cleverly, analyze endlessly, or monitor obsessively. You need to recognize something valuable and then refuse to let other people's stupidity shake you loose from it. Real money is made by doing nothing when nothing needs to be done. The investor who holds long enough lets compounding outweigh every mistake, every downturn, and every crisis. The market rewards the stubborn believers who understand what they own. It punishes the restless wanderers who can't stay committed to anything. Holding forever isn't a slogan, it's a discipline. And only those who master it ever discover how quickly forever turns into financial freedom. People assume that great investors are born with extraordinary talent. They imagine genius, intuition, a kind of financial sixth sense. They couldn't be more wrong. The truth is far simpler and far less glamorous. Great investors are merely more rational than the average person. They think clearly when others refuse to. They stay calm when others lose their minds. They make sense when the world becomes nonsense. Rationality is not a gift. It's a discipline. It's something you practice, sharpen, and defend. You don't get there by being smart. You get there by being honest with yourself. Most investors lie to themselves constantly. They pretend they know the future. They pretend they're not acting emotionally. They pretend they're making independent decisions while secretly copying the crowd. Intelligence won't save you if you can't admit when you're being a fool. I became wealthy because I learned to attack my own thinking. I asked, what if I'm wrong? More often than I asked, how can I be right? I looked for flaws in my logic before I looked for profits in the market. Most people search for confirmation. I searched for contradiction. It's impossible to be rational if you only seek comfort from your own beliefs. Rationality requires humility. You must accept that you will be wrong many times in life. You must be willing to wait, learn, correct, and keep going. You must ignore applause and criticism with equal indifference. You must treat your opinions as temporary, not sacred. You must let evidence change your mind. If you allow ego to control you, the market will punish you harder than any competitor ever could. People chase brilliance because they think brilliance is how you win. They don't realize that avoiding stupidity is vastly more reliable. You don't need to be a genius to spot a great business. You just need to avoid letting greed, fear, envy, or excitement push you into bad ones. Money flows to those who avoid mistakes long enough for compounding to reward their patience. Rationality is simply a shield that protects compounding from your own misbehavior. Being rational means accepting that the future is unpredictable and acting accordingly. It means refusing to bet your fortune on guesses, trends, or emotions. It means sticking to businesses that are durable, obvious, and understandable. It means making decisions that you'd be willing to defend 20 years from now. not just this week on social media. It means being comfortable with boredom and uneasy with hype. Most people want wealth quickly, dramatically, and excitingly. They want success that impresses others. I pursued success that simply worked. Wealth is not a performance. It's a consequence of rational decisions repeated for a very long time. If you can remain reasonable while the world behaves irrationally, then your wealth will grow quietly, inevitably, and without the need for brilliance. I didn't become rich because I was special. I became rich because I was willing to be ordinary in a world addicted to foolishness. That's the real secret. Be rational when it's easiest to be emotional. Be patient when it's easiest to be impulsive. Be disciplined when it's easiest to be reckless. Do that long enough, and the market will serve you rewards that others will call luck. Rationality doesn't make you flashy, but it makes you free. Free from ignorance, free from envy, free from panic, and free from financial chaos. You don't need to beat the market. You just need to avoid being like most people in it. If you can manage that, wealth isn't a possibility, it's a guarantee.